So we're here talking about taxes, specifically the British Columbia foreign buyer tax. I'm here with Gurpreet Randhawa. She is a partner at the Sitka Law Group. In fact, we're here in the boardroom of the world headquarters of Sitka Law Group.
Headquarters.
Yes. So Gurpreet's going to answer some questions about the foreign buyer tax, but there's always a little preface that you have to open up.
Yes, exactly. Obviously, everything we're discussing is for informational purposes only. And if you are looking to get some advice on this, please do contact your lawyers, accountants to get some further advice.
And of course, the lawyer can be you.
It can be us, yes.
Yeah, so give the Sitka Law Group a call if you have any questions. So first of all, the foreign buyer tax, who pays the tax?
Yes. So foreign buyer tax is technically referred to as additional property transfer tax. So in BC, we pay property transfer tax each time we purchase.
Yep.
It's a percentage of the value of the property.
1% on the first 200,000, 2% on the balance
up to 2 million.
Yeah.
And then
it's 3%.
Exactly. So this tax, foreign buyer tax as we commonly refer to it, is in addition to that, and it is 20% of the purchase price.
So if someone's buying $1 million property, then the tax is $200,000 in addition to the property transfer tax.
Yes.
Okay.
Yep, it's substantial.
Yes. And who gets to pay it?
The buyer.
What's the criteria?
So if you're not a permanent resident or a Canadian citizen and you're not a confirmed provincial nominee, then you are required to pay the tax.
Okay.
You're essentially a foreign national.
Yes. Yeah. What if one of the buyers is exempt? So if you've got two people buying, one of them is a Canadian citizen living here in BC and the other one is not.
Good question. Comes up a lot. Technically, the foreign buyer tax would be payable on the percentage owned by the foreign buyer. So in that situation, if we have, for example, a husband-wife situation, wife is a Canadian citizen, husband is a foreign national, then he would trigger the foreign buyer tax.
Okay.
A question I get quite a bit is, what if wife registers as 99% in that situation and husband registers as 1? Well, property transfer tax department is going to look at the substance of that relationship. So if they truly contributed 50-50, but only registered as 99 and 1 to evade the tax,
that's a problem.
Then they are potentially going to be penalized. So if the parties are truly contributing 50-50, then ownership should be reflected.
Yeah, it's important to mention as well too the seriousness about tax avoidance. So this is something that is very dangerous.
Very dangerous. Property Transfer Tax Department is auditing these applications, and if they have reason to believe that you minimized ownership of the foreign buyer to evade the tax, you will be penalized.
Okay.
Yeah.
Very dangerous. On leasehold or co-op properties, so if one of those transfers, is it applicable?
Yeah. So anytime we're dealing with a property that requires registration through land titles and it's residential, it's going to trigger the foreign buyer tax.
Okay.
So leasehold, for example, does get registered and would attract the tax.
Okay, good to know.
Yeah.
How about bare land purchases?
Yeah.
So a vacant piece of land,
with that, if the land is classified as residential on BC assessment, even if it's vacant, it will attract the foreign buyer tax.
Okay.
Yeah.
Yeah. But it will not if it's industrial or commercial.
Exactly.
Okay.
Yeah.
All right. If someone is in the process of becoming a Canadian citizen or permanent resident, is there an exemption?
So there's no exemption in that situation. The person applying does still have to come up with the tax at completion. However, if they do obtain their citizenship or permanent residency within a year of completion and they apply for a rebate within 18 months, then they potentially will receive a refund if the property was their principal residence and they moved in. I think it's within 92 days of completion.
Okay.
Yeah.
Well, the key there is to know that the process to become a Canadian citizen takes longer than, it takes a long time.
It takes a long time. Yeah. So you may or may not meet that criteria.
Okay.
Yeah, you still have to pay it up front though.
All right.
If, however, you're a confirmed provincial nominee at the time of completion and you provide your lawyer or notary with a letter from the provincial nominee program confirming that, and that has not expired, or if it has expired, you've applied for permanent residency and have proof at the time of completion, then you can claim the exemption. Okay. And again, Property Transfer Tax Department is going to audit your application to confirm all of this is in place and you are purchasing a principal residence and moving in within a certain time period. But in that situation, you could potentially qualify for an exemption.
Okay, again, very complicated,
Yeah.
right?
Yeah.
The last one is, what if a buyer is buying a property through a company?
Yeah, good question. So the Property Transfer Tax Department is looking at whether that company is a foreign entity. So they're looking at whether the company was incorporated in BC or if it's directly or indirectly controlled by a foreign entity.
Okay.
So for example, if we have multiple owners of a company, some of them are overseas or out of the country and not a Canadian citizen or a permanent resident, they're really looking at whether that individual or those individuals are directly or indirectly controlling the business and have the ability to influence decision making.
Yeah.
And if that's the case, then
the
that
foreign
may
buyer tax is
detract.
paid.
Yeah,
Okay.
exactly.
Oh my goodness, so really complicated, but
very
again, if you
complicated.
have any questions about the foreign buyer tax, please confer with your lawyer.
Yes.
Ask the gang here at the Sitka Law Group.
Yes,
Great.
absolutely. Thank you.